Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So yesterday, Berkshire Hathaway held their 2020 annual meeting. It was a little bit different to usual. Instead of an enormous crowd of over 10,000 people, it was basically just Warren Buffett solo, but he had some brilliant insights and some wisdom that I thought I would share with you guys today. Given I know a lot of the people watching this channel are young investors, either by age or experience, I thought it was well worthwhile sharing these words of wisdom from an 89-year-old investor. So without further ado, let's dive in. Hey guys, before I forget, WeBull have extended their offer for US residents. If you'd like to help out the channel and get up to 2 free stocks, use the link in the description. All right, let's get back to it.
But going back to stocks, people bring the attitude to them too often that because they are liquid and quoted minute by minute, that it's important that you develop an opinion on them minute by minute. Now, that's really foolish when you think about it. And that's something Graham taught me in 1949. I mean, that single thought. Stocks were parts of businesses and not just little things that moved around on charts. Or charts were very popular in those days, and whatever it may be. Imagine for a moment that you decided to invest money now, and you bought a farm. And the farmland around here, let's say you bought 160 acres, and you bought it at X per share, or per acre. And the farmer next to you had 160 identical acres, same contour, same quality of soil quality. So it was identical. And that farmer next door to you was a very peculiar character because every day that farmer with the identical farm said, I'll sell you my farm or I'll buy your farm at a certain price, which he would name. Now, that's a very obliging neighbor. I mean, that's got to be a plus to have a fellow like that with the next farm. You don't get that with farms. You get it with stocks. If you want 100 shares of General Motors, on Monday morning, somebody will buy your 100 shares or sell you another 100 shares at exactly the same price. And that goes on 5 days a week. But just imagine if you had a farmer doing that. When you bought the farm, you looked at what the farm would produce. That was what went through your mind. You were saying to yourself, I'm paying X dollars per acre. I think I'll get so many bushels of corn or soybeans on average. Some years good, some years bad. Some years the price will be good, some years the price will be bad, etc. But you think about the potential of the farm. And now you get this idiot that buys the farm next to you, and on top of that, he's sort of a manic depressive and drinks, maybe smokes a little pot. So his numbers just go all over the place. Now, the only thing you have to do is to remember that this guy next door is there to serve you and not to instruct you. You bought the farm because you thought the farm was had the potential. You don't really need a quote on it.
This is so important. Like, really, really, really important. It doesn't matter what on the day somebody thinks the stock is worth and is willing to trade it for. That has nothing at all to do with your thesis about the company and its ability to execute. Nothing. Literally nothing, okay? It does not matter. The only thing that matters is whether this company that you're invested in continues to execute based in line with what you believe they can and will do in the future. And if not, you can adjust your plan, that's fine. But it doesn't matter what the stock's selling for. It literally does not matter. If you're a long-term investor, by investor I mean you buy assets and you hold them long-term. It's just completely irrelevant. You bought this for a long-term investment. You're not planning on selling it today or tomorrow or next week. So it literally doesn't matter what people are exchanging that asset for at that point in time.
If you bought in with John D. Rockefeller or Andrew Carnegie, and there were never any there were quotes later on, but basically you bought into the business, and that's what you're doing when you buy stocks. But you get this added advantage that you do have this neighbor who you're not obliged to listen to at all, who is going to give you a price every day, and he's going to have his ups and downs, and maybe he'll name a selling price that he'll buy at, in which case you sell if you want to, or maybe he'll name a very low price and you'll buy his farm from him. But you don't have to, and you don't want to put yourself in a position to where you have to.
An important little comment there too. Putting yourself in a situation where you would ever be forced to sell when it's not on your terms, never a good idea.
So stocks have this enormous inherent advantage of people yelling out prices all the time to you. And many people turn that into a disadvantage. And of course, many people can profit in one way or another from telling telling you that they can tell you what this farmer's going to yell out tomorrow or next, your neighboring farmer's going to yell out tomorrow or next week or next month. There's huge money in it. So people tell you that it's important and they know, and that you should pay a lot of attention to their thoughts about what price changes should be.
So some comments there around analysts and price targets, basically. For those of you who are familiar with my channel, you may have noticed, despite a ton of you bugging me and asking consistently, I've never mentioned my price target on Tesla because I don't have one. I don't think like that. I don't invest like that. For me, it's all about long-term execution. Can they do it? What are their chances? Is there anyone else who can come in and sort of, scoop away the number one position, etc. or not? And that's all I care about. Price target, who cares?
Or you tell yourself that there should be this great difference. But the truth is, if you owned the businesses you liked prior to the virus arriving, it changes prices and it changes, but nobody's forcing you to sell. And if you really like the business and you like the management you're in with, and the business hasn't fundamentally changed, and I'll get to that a little when I report on Berkshire, which I will soon, I promise. The stocks have an enormous advantage, and you still can bet on America, but you can't bet unless you're willing and have an outlook to independently decide that you want to own a cross-section of America, because I don't think most people are in a position to pick single stocks. A few maybe, but on balance, I think people are much better off buying a cross-section of America and just forgetting about it. If I'd done that when I got out of college, it's all I had to do to make 100 for one, and then collect dividends on top of it. Would increase substantially over time. The American tailwind is marvelous. American business represents, and it's going to have interruptions, and you're not going to foresee the interruptions, and you do not want to get yourself in a position where those interruptions can affect you, either because you're leveraged or because you're psychologically unable to handle looking at a bunch of numbers.
This is an incredibly important point, and I can sort of relate to this firsthand. I read all your comments. There's thousands of them every week, and so I pick up patterns and notice what people are thinking, doing, saying in terms of investments, etc. So when the shit hit the fan recently, I was privy to literally hundreds and hundreds of people commenting and explaining the stupid things they were doing. People who'd bought a stock and sold at a massive loss despite nothing fundamental changing about their investment thesis at all. They were just panicking and freaking the fuck out because, oh my god, the stock market's crashing. Everything's worthless. What do? I don't want to lose more money. And then they sell and lock in a loss. Anyway, the point I'm making here is that if you don't have the temperament and emotional control, the maturity to actually make a decision and stick by it and reason your way through challenges and surprises rather than panicking your way through them, or if you're putting yourself in a situation where if something goes awry, you're in trouble financially because, for example, you're investing on margin, you can't cover that margin call, you should not be in the market. I'm sure there's a few people watching now that are like, oh crap, hang on a minute. Yeah, my emotions probably aren't really under control, or wait a minute, I didn't really have a plan, or oh, hang on, I did buy a margin, I can't cover that margin call. Yeah, so this isn't an investment advice, but this is don't be a fucking idiot advice. Maybe reconsider that.
If you really had a farm and you had this neighbor and one day he offered you $2,000 an acre and the next day he offers you $1,200 an acre and maybe the day after that he offers you $800 an acre, are you really going to feel that at $2,000 an acre, when you had evaluated what the farm would produce, are you going to let this guy drive you into thinking I better sell because his number keeps coming in lower all the time? It's a very, very, very important matter to bring the right psychological approach to owning common stocks. But
the point really does bear repeating. If this isn't right, your psychology, your emotions, you shouldn't be investing in the market, because odds are you will do something driven by emotions that isn't in your best interest.
I will tell you, if you bet on America and sustain that position for decades, you're going to do better than, in my view, far better than owning Treasury securities, or far better than following people who tell you that what the farmer's going to yell out next. There's huge amounts of money that people pay for advice they really don't need, and for advice where the person giving it can be very well meaning in it and believe their own line. But the truth is that you can't deliver superior results to everybody by just having them trade around a business. Bought into a business that's going to deliver what the business produces, and the idea that you can outsmart the person next to you, or that the person advising you can outsmart the person sitting next to you, is well, it's really the wrong approach. So find businesses, get a cross-section. In my view, for most people, the best thing to do is to own the S&P 500 index fund. People will try and sell you other things because there's more money in it for them if they do. And I'm not saying that that's a conscious act on their part. Most good salespeople believe their own baloney. I mean, that's part of being a good salesperson. And I'm sure I've done plenty of that in my life too. But it's very human. If you keep repeating something often enough, that's why lawyers have the witnesses keep saying things over and over again that by the time they get on the witness stand, they'll believe it, whether it was true in the first place or not. But
I share Buffett's view on this. I think for the average investor out there, the S&P index is a great way to just follow the market. It's really, really hard to screw that one up. You're not picking individual stocks. Of course, this is a little bit of a matter of do as I say and not as I do, because in my personal case, 98.5% of my stock portfolio is made up of just 3 stocks. Now, I've only got a 10-year track record of destroying the market, so maybe that won't continue, but my plan is to extend that run indefinitely. It may turn out when all is said and done that I would have been better off investing in the S&P index as well. I'm open to that possibility, and I think there's a reasonable chance, because in the long term, the longer you take and sustain that risk, the more likely the unlikely transitions from improbable to inevitable. So I hope you guys have found this video insightful. The reason that I've posted this is I know that there's a lot of young, either by experience or age, investors who are watching this channel maybe aren't familiar with some of these fundamental truths about investing in the stock market. So I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. And you can now also become a member of the channel to get some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.
you are dealing with something fundamentally advantageous, in my view, in owning common stocks. I will bet on America the rest of my life.